Aloha, my friend. Looking at the paper trading account. Stock market closed earlier today, closed at 11 a.m. Hawaiian Standard Time. And I'm recording this on Wednesday, January 18th, 2023. Paper trading account, as you can see right here. Still have this order open on, this position open on crude oil. 28 days left. It's $50 in the green at the moment. Sold this for 17 cents. Possibly could close it out at 12 cents. And something to keep in mind about these future contracts is unlike stock options, each future option, if the future has options, they have a different multiplier. The multiplier for stocks are 100, right? You can open these up. You're going to see it's 100. The multiplier for futures depends on the future. For WTI crude oil /CL right here, it is 1,000. So it's 1,000 times 17. So I brought in 170 bucks. And so that's going well. I got this set up to a limit order to close at 10 cents, roughly making around 70 bucks. And we're getting close. We're getting close to that. Maybe maybe I'll drop that down a little bit, move it down to 7 cents or 8 cents. We'll see. We'll see what happens when I wake up in the morning. And then our Apple, we got the naked call option sold at a strike price of 150. 16 days left to expiration. It's $1 in the red, and Apple has been going up. So you got Apple here. This is a 2-day 15-minute chart, right? Hit a high of 138.62 during normal trading hours today, and kind of sold off. So over the last couple days, it's been had been moving up in the last 2 days. That shows 2 days, but it really seems like 1, 2, 3. How about that? So 2 days, kind of moved up, gapped up just a little bit today, hit this high, and then sold off. So it looks like for the last couple days, right in this area, a lot of sideways moving around that 135 to 136. And if it keeps doing that, if it kind of keeps failing to break 140, then I'm not super I'm not worried about it regardless, but I won't have to make an adjustment. We see, looking at the 5 days hourly chart, that over the last 5 days has been moving up. Hit a little high here, and then today another high, but it sold off, right? 2 days in a row. Boom, opens up, and then basically sells off. Boom, opens up. This wick on this one was a little shorter than the wick on this one, even though it's gapped up a little more. So look, a lot of volume right here, but then the volume trickled off. A lot of volume right there, and then that volume trickled off. So hard to say exactly. Let's look at the daily chart, see what the volume looks like there. Overall, we see price action kind of went sideways. This is where our candle closed yesterday, and it closed here today. So it's up just a little bit. This is where it opened yesterday. This is where it closed today. So up just a little bit. And these when you have these longer wicks coming up to the top, that showing you the price is sold all the way up here. Prices bought, buyers pushed prices all the way up here. Buyers pushed prices all the way up here, but selling pressure drove these prices down, making that little formation. So having two of those side by side could be an indication that maybe we'll get a little bit of selling off. And we're I don't know how many days looking at right now, but this is definitely a daily candle. Let's zoom back out. So we see that 1, 2, 3, 4, 5, 6, 7, 8 trading days ago. Right, so 7 trading days, it hasn't even hit the average volume. And you could, 50-day right here, average volume. You see the average volume is even kind of starting to slope down a little bit because it's just not a lot of volume. Here, it's a lot of volume in the selling, but in order for me to think that this is really going to have some momentum to make it up to past these different resistance areas, if I saw like continuation of these type of bars, volume bars right here, and I'm seeing those, then maybe I'd be a little more thinking I might have to adjust. Now I still might have to adjust, but at the moment I just think it's possible I might not have to. And generally speaking, after about 10 days, things can sometimes change. So we're at 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Isn't that interesting how it worked out? So look, went down right here, right? It's been going up for 10 days, and we go 10 days back, and it was basically kind of bottoming out. So that's 10 days. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Right? I get it. It's not rocket science. I mean, it's not complete science, because look at it drop down here. So this one was really like on the 9th. Like it basically went down for 9 days, and then it started around 9 days, right? 9 days, 10 days, somewhere in there. And from this sell off, low rally up, 1, 2, 3, 4, 5, 6, 7, 8, 9. Maybe we should count back, but I don't know where the real science is there, but it's been roughly around 10 days or so. Maybe it'll sell off a little bit. We will see. I'm pretty safe with that adjustment, right? I'm ready to purchase 100 shares to turn this into a covered call from a naked call if so needed, and basically if and I'll really start considering it a lot more if prices start really breaking over 140 and continue to close over 140. So that's what's going on with Apple, how I'm managing that particular one. The rest of these are I'm just kind of letting them ride out, and I'm gonna put a link right here. It's at 8 minutes and 15 seconds, so it's coming up. 8 minutes 15 seconds. Get ready. It's coming up. Just remember the 8-minute 15-second. Boom. Here it is. It just popped up. 8 minutes and 15 seconds. You can watch this video and go back later and watch that one at 8 minutes and 15 seconds. That will show. It's going to be part 2 to selling options with the VIX, and then part 2 will link to part 1. So sorry about that. That's just the way that it is. So you can deal with it or not, whatever you want. It's free. And so all these were sold with the VIX. These are all this one, this one, this one, and this one. They're all naked call options that have an expiration date around 2025. Maybe one has 2024. I can't remember. Maybe I closed that one out. This one is actually a spread, credit spread, and this one is a strangle on GLD with the same long dated expiration date. So using those leaps. So we see on Amazon currently profitable by 124, and this gold strangle is down by 2650. Microsoft up a little less than 600. Netflix, which was negative over 1,000 before, it's just basically becoming less negative. And Nvidia down by 40 bucks. This one got as low as it was profitable by like 1,000. The most I've seen it, the biggest profit I think I remember seeing out of it was 26. And they're all set up to automatically close at all these lower to automatically close at half of whatever premium I took in. And this one is set up to close at 10 cents. And we'll see if that happens. Still got this short one share of SPY that's kind of a random thing. And have Walgreens expired worthless. Still have these two covered call, cash secured put options sold with 2 days left, and it really seems like they're both going to expire worthless. So that's the basic lowdown of what's happening at the moment with this. And I'm getting ready. Got to set up another simulated account. I'm gonna start with a $10,000 account, and this one I'm not going to be putting on YouTube though. This one I'm working on a product, weekly ongoing training product for I Have Success, and I'm just kind of floating it out there to let you know that it's going to start off with a $7 a month price. If you want to get a lower price than that, anyone that has downloaded any of these and when this product is launched, which is going to be before sometime in the first three months. So we're almost done with January, February, and then what is that month after February? March. So by the end of March, going to be either March or the end of March or before, I will be launching it, no matter how rickety it is. And $7. If you're on this list, you'll have a chance to get it for $4.99 a month. And if you're not on this list, you'll have a chance to get it for $7. And then at some time in the future, I don't know when, I'm going to be raising the price up per month. Once I get, the technical things, make sure everything's technically dialed in, and as this YouTube channel keeps growing, and as the website online business keeps growing, at some point, I'll be raising that price. But anyone that gets in at $7 or whatever, $4.99, you'll have that be grandfathered in through infinity. I guess I'm not going to live forever, so until the time I die, I'll be running this as long as I cognitively can do it. As long as you don't cancel, you'll be into those prices. Even if someday I raise that up to $20 a month, maybe even $50. So what it will be is I'm going to be using Finbox to be scanning for stocks that are really good candidates to sell cash secured put options on. So here's the things that I'm scanning for my personal account, right? And I've got some other screeners in here, but for something that you can kind of do the wheel strategy on, but you don't necessarily have to. You should be able to hold the stock for quite a while. We got an average volume of at least 500,000. Dividend yield of 3% or greater. Enterprise value to EBITDA less than 10. PEG ratio less than actually between 0 and 1. So we're not going to be in the negative PEG ratios, but I'll be looking at a particularly good buy in there. Market cap. Market cap, I might. I'm playing with that one to figure it out. But this definitely is not going lower. Basic earnings per share growth greater than 20%. Revenue growth greater than 20%. Current price is going to be between $4 and $50. And with a 10-year average dividend yield of at least 2%. So if they've been giving dividends for the last 10 years, at least 2%, it's It's not a guarantee it's going to continue to do that, but it's a higher likelihood. And there's some other things in here that screening for, but Finbox is something you pay to use. If you don't want to pay to use it, you can potentially set up similar type of screens with Yahoo Finance for free. You go under Equity Screener. You can pick whatever mid cap, large cap, between whatever prices that you want to see stocks between, and start looking through here. Right, average volume. Maybe you want to do average volume of 500,000 or whatever you feel like. I like that. I like to do the enterprise value over EBITDA less than 10. I have a video on here that is in. It'll be linked. It's in a playlist, and that playlist is in the description below. It says trading options for beginners, with beginners in all caps. The 5th video in that playlist will show you how to set up this a little more, but it's not. I didn't show you as detailed as this, but you can pause that, see if you can grab stuff off there and figure that out. Also, check out the I Have Success website. Download some of that stuff. So we had a Walgreens cash secured put option that expired worthless a little while ago. So one thing that you can do is you can pull up a certain stock. I'm going to sell, regardless of what I find here, I'm going to sell another cash secured put option on it. So Walgreens, like I'm not paying, but I see that without paying for this, they don't tell me the number, but I see where what they're thinking this fair value is, right? You can read through that, figure out how they get that fair value, and we see it's kind of in the middle right there. Right, we see this beta. That means how much it's moves with the stock market. Now a beta a little bit under a beta under 1 means that it's sort of more calm than the stock market. Beta over 1 would mean it kind of moves exaggerated with the stock market. PE ratio under 10. It really you want to look at different sectors and see what their average PE ratios are. But in as a general, just a very general rule of thumb, this is not. It's not enough. You got to look at the sectors, but under 10 seems generally pretty good. 52-week range. We see it's been as low as 30, been as high as a little less than 55, and we're at 35. So we're at the lower end of the trading range. We got an average volume of over little over 6 million shares a day. So it's pretty liquid stock, and shows the market cap. Right now we got 1 day. You can look at, here's a chart of the max, whatever time it is, going back to 1984. Right, got all the way up here, highs up here of 84. I can, just by looking at this, I see that this 35, watch when I hover on that, watch the line. See when I move. Look right in here. Right, see how it's like all this area. It doesn't surprise me that it's right here right now. Now, if it breaks below this like 23, then it could be dropping a bit more. But so it gives us an idea of the big overview of it. Let's scroll down here. You can also check out this stuff similar to, right, these different Rite Aid, Pet Med, High Tide, whatever that is, 111, China. I particularly don't really look into the Chinese stocks. And why don't I look into the Chinese stocks? Boo hao. I don't do that. Boo hao. And I do love my Chinese friends here. I just don't I don't know. I don't trust certain numbers out of certain countries, and so boo hao. Right, ni hao ma, boo hao when it comes to those about trading stocks out of China. For your good buddy Brent, you do you. Look at this, earnings, right? Revenue. So seems to be, well, there's a lot of, where's all this money getting taken up from? Earnings compared to revenue is kind of small, but at least it's profitable. This year, wasn't that profitable. You can scroll down here more. You can read all about it. You can see what sector it's in. You can give them a call and ask for a job, or ask if they're going to give you some insider trading so you can go to jail. And then you see right here, here's the sector, and then it's showing you in relationship, right? I guess it's considered in the healthcare sector. So high on dividends, high on hiring. And then what we can do is we can take a look at these under statistics. Well, Snapples, we didn't check out the dividend. Now, look at this, enterprise value to EBITDA. Oh, maybe we don't want to sell on this. Negative. Why is that negative? Negative, I mean, I guess it's below 10, but I don't know if we want to go in the negative. I don't know what would be going on with that. Look at this. Held by insiders. 17, a little more than 17% of insiders hold this. So that's, some of them you see like 2%, right? So that's a good amount. Who knows the company the most? The insiders. So that's pretty good. It's about 60% of shares held by institutions. See that forward dividend yield, what they're looking at giving is they're expected to continue to do is about 5.17% at this current stock price, with looking at $1.92 per year per share. And look at this payout ratio. Oh, it's not showing the payout ratio. Not showing the payout ratio. Why do you want to see the payout ratio? Well, because you want to see how much of this revenue is going to pay this dividend. Sometimes if that number is too high, dividend might get cut, or could be showing some bad things. Profit margin, look at that. Profitability, they're in the negative. What else? Let's take a look at what do we see here? PEG ratio. Man, it's not showing us a PEG ratio. I'm losing faith, right, in Walgreens at the moment. Cash flow, free cash flow. Okay, after they pay their monthly bills, look at that. They got a grip of money left over, which is pretty nice. Balance sheet. Let's see. Where is total assets? Let's look at this. Cash and cash equivalents. All right, you got about $2.5 million in cash and cash equivalents. Total liabilities. What do I want? I want here total debt. And look at that. So total assets. They definitely don't have enough cash and cash equivalents on hand to just pay this off if needed. Sometimes that's nice to know. But you know, so I don't know. I think there's definitely fundamentally stronger stocks than this. So what's the point of this? This stock is not suitable. In my opinion, this is not suitable. But I'm going to sell a cash secured put option on it anyways. And the reason why is I picked a stock that is not suitable. I wanted to show you why it's not suitable, because this is not financial advice to do this. You learn how to do it on your own. Find stuff that's suitable for you. So let's take a look at Walgreens. Boom. Take a look at this daily chart, 6 months. See it hit a high of 42.29, low down here, beginning low. Now just taking a quick look, you know, well, just for fun, let's see if we could sell something at 30 bucks, $31. Could we sell a cash secured put option 30 days? What would we get for 30 days out? Right, we see the quick and dirty probability here via delta, 0.05% delta. It's telling me there's about a 5% chance this will expire in the money, right? 95% chance this is going to expire worthless. Now that is not exact science. It's just a rough and dirty. Open interest. There's a little bit over 1,000 people already been interacting with this contract. Today alone, 42 contracts. Highest it sold for was 9 cents. Lowest it sold for was 6 cents. So let's put this in. Even though I wouldn't want to, even though I think there's better quality stocks to own personally, I'm just going to do it for fun, for learning example. But as I mentioned, I'm not putting my own money into this, into the stock, especially when there's those unknowns about it. Maybe if I research it a little more, but let's see if we can get filled at $9. You know what? Let's go crazy. Let's go 10, and we'll change that to good to cancel. So what are we doing? We're selling one Walgreen boots put option at a strike price of $30. It's going to expire February 17th of 2023. It's for 100 shares of the stock. We're saying that we want a minimum of 10 cents times 100, so $10 to do this. Shows you the break-even prices. If right, $30, right, $30 minus the 10 cents brought in, $29.90. Max profit would be $10. Why is that? Because we brought in $10. It's not showing the commission, which is or whatever, the fee right there. Max loss would be right here, not including possible dividend risk. Max loss would be this number times 100 equals this number, right? If the stock were to go to 0, we're to lose that total investment. Buying power effect, tying up a little less than $300. Switch this over to long stock. Send that off. And now it's showing up right there. And we'll see if that gets filled. And so at 8 minutes and 15 seconds, there's the part 2 of trading options with the VIX. From part 2, there's a link to part 1. You can watch both of those and get start paper trading that. You can paper trade selling cash secured put options. In the description of this video, as I mentioned, trading there's like trading options for beginners with beginners in all caps playlist. The 5th video will give you a better idea of how you can set up the Yahoo Finance screener. You can pause here and pull more information out if you want to look through the screener tool and see if you can put that type of information in there to try to get stocks that are better suited for you. You could go 10%. You don't have to do 20. You can do 50. You can do 40. You can do whatever you want. You don't have to do it. You can do whatever you want. Paper trade it. Try different things and see what happens. Aloha.